Welcome to Spiedel's Federal Tax Minute. I'm your host, Catherine Zidane. This week, we're covering Form 1099-K matching problems and how to solve them. Take your professional knowledge to the next level with one of Spiedel's upcoming live webinars. Future events will cover topics like solar energy credits, using AI in your tax practice, avoiding worker classification penalties, and more. To see a full list, go to spiedel.com and click Webinars. Form 1099-K can present a unique challenge for tax professionals because it's easy to run across matching problems where the revenue on the client's books is less than the sum of all their 1099s, so 1099 NEC, 1099 miscellaneous, and 1099-K. There are two very common scenarios that cause the vast majority of mismatching. First, small clients who have a very simple understanding of accounting will often record only revenue hitting their bank account in their gross receipts. In this scenario, the third-party payer's merchant fees are not recorded. Taxpayers faced with this type of reporting error should report the full gross revenue and deduct the merchant fees separately. This is true for individuals and business entities. This is an accounting error that should be addressed before completing the income tax return and is not a 1099 reporting error. The second most common scenario is caused by double 1099 reporting, where the same transaction is reported on both Forms 1099-K and Form 1099 NEC or 1099 miscellaneous. The event that triggers 1099 NEC or 1099 miscellaneous reporting is the payment to a service provider that takes the taxpayer to the $600 threshold for the year. So if any payment to the service provider, no matter how small, won't be reported on Form 1099-K, then the payer has to issue a 1099 NEC. Issuers of 1099s often don't take the time to distinguish which payments were made via check versus via credit card when it comes time to prepare their 1099s. So it's very possible that a taxpayer could receive a 1099 NEC from a service provider for the total amount paid and will also receive a 1099-K from the credit card company for the amount paid by credit card. This scenario results in double reporting for the same service income. Taxpayers are required to report their correct revenue and expenses on their income tax returns. So in a perfect world, a taxpayer would report gross revenue correctly without making adjustments for the double 1099 reporting. But the IRS's automated matching system doesn't make life that easy. In order to avoid IRS notices, some level of manipulation is required where the taxpayer is presented with 1099 reporting errors. The manner of fixing 1099 reporting errors is different for individuals versus business entities. Starting with the 2024 taxable year, the IRS updated Form 1040 Schedule 1 to include a line at the top of the form for taxpayers to enter any amount reported to them on Form 1099-K that was included in error or that was for personal items sold at a loss. For taxpayers faced with double reporting issues, the taxpayer should report their correct revenue on Schedule C and use the line at the top of Schedule 1 to report the double reported income. Use Schedule E if the double reporting is from a rental activity, Schedule F for a farm, and Schedule 1 for other income. Unlike individual taxpayers, business entities don't have a simplified method to report erroneous 1099-K income. Business entities have to report the full gross receipts, but then back out the erroneously reported item as either an expense or as negative other income. But watch out for issues that are keyed to a taxpayer's gross receipts, like the business interest limitation or states that charge gross receipts fees like California's LLC fee. Where gross receipts issues are present, tax professionals may have to make manual tax return adjustments to make sure the client isn't harmed by reporting higher gross receipts than they actually have. We covered this topic in a recent issue of Spiedel's Federal Tax Letter, a monthly newsletter plus a searchable online archive of back issues that keeps you at the leading edge of the federal tax issues that impact your clients. You can get more details and subscribe at spiedel.com under Publications. That's all for this week. Join us next time for another episode of Spiedel's Federal Tax Minute.